Okay.
Okay.
Okay, so I believe Marcia and Peter are both on video conference. Give them a second to.
I'm here.
I can see Peter. Well, I can see Peter's computer. Ross Carey,
Here.
Joe Gagne,
Here.
Jimmy Murray,
Here.
President Schill,
Here.
and Andrew. I don't believe Andrew has joined yet.
He was on earlier, but he disappeared.
Okay.
I saw the thing. He just got off.
Okay, I'll text him right now. Oh no, they're both on
Okay.
confirmation. So
Great.
maybe.
Peter Bracken's here.
Thank
Okay.
you.
So we do have a quorum.
You do.
Okay, the first order of business is approval of the minutes of our December 2019 FFC meeting. Any comments? These were previously distributed. If not, do we have a motion to approve?
So moved.
Second.
All in favor? Aye.
Aye.
Any
Aye.
opposed? Thank you. Next order of business. This normally goes to the Executive and Audit Committee meeting, but this would have been the only item on that. So Chuck hunted the FFC to include this on our agenda. I would like to invite or welcome Leah Ladley, who just joined the university 2 weeks ago. About 2 weeks ago. She comes to us from St. Jude Research Hospital in Memphis, Tennessee. And so she's gone through a change in industry and a change in culture, and welcome to the University of Oregon. She's also a big track fan, so she'll fit in well. But was Amy going to join us?
Amy has a cold, so Amy will not be joining you.
Okay.
That was the original plan, though.
Well, I would like to publicly thank Amy Smith for filling in as interim audit director and ask you to take us through the report.
Okay. Can you hear me? Am I close enough? So good afternoon. I'm so happy to be here, and let me tell you that if you hear me cough or clear my throat, it's seasonal allergies. I'm new to the industry and new to university and new to the climate as well. I've had no fever though. So I'm glad to be at UO, continuing my internal auditing career, and I'd like to extend the same thing that you said about Amy. She's been an excellent interim chief auditor and continues to be a great resource and a help to me as I adjust and learn more. Katie and Andrea have great insight and perspective, and we're all working well as a team, so you should know that. So I come to Oregon from Memphis, Tennessee, where I recently spent 12 years in internal audit at a children's research hospital. More than 10 of those years were in the lead role in that department. In Memphis, I experienced both sides of highly decentralized environment and often worked to balance unit autonomy with a centralized control. So it's very similar in that aspects to what we have here. And so just a little bit about me as a background. I have a bachelor's of science in business administration with an accounting concentration and a math minor. And I also earned my MBA on my way to the CPA exam. Sounds like my house.
Sorry.
So as a CPA, I'm trained to be attuned to internal controls and segregation of duties, and always listen with an ear for the impact of financial statements. I use my certified fraud examiner training to explore the what-if scenarios and to contemplate what could go wrong. My certified internal auditor training helps me in my daily work, both when I'm providing assurance and when I'm overseeing the department's activities. And my CRMA helps me take a broader look at risk controls across our organization. And I look forward to working with your other risk professionals here at UO. As you said, this is day 14 for me at UO, and I continue to learn about the UO processes and where we are on internal audit projects. As it's been a while since your internal audit team was fully staffed, our first priority has been to identify where we are on projects and determine what we're going to do with those projects that have not been completed yet. We're assigning priorities to those items, and we'll move forward accordingly and keep you updated. Know that I'm fully committed to supporting your team and working to provide the executives and the board what you need to lead and govern. And so moving on to the quarterly report that I'm filling in for Amy for. We filled in for each other before we even knew each other. So I'm going to talk in buckets here. So in the world of audit, there were 2 audits completed this quarter. The NCAA football attendance was completed with no recommendations, and the audit objective was met. The ticket and parking sales processes, the results included 3 observations. Management agreed with the recommendations and responded with near-term action plans. Data governance has been completed since your materials were prepared, and 2 audits are in various stages of completion today. That's vendor reviews and NCAA compliance. So data governance was completed with the assistance of Baker Tilly, and management was receptive to the recommendations. In the area of consultations, due to both turnover and capacity with the internal audit team, requested consults have not been completed timely. We're in the process of determining the status of those requests, bucketing them as still needed, no longer necessary, or elevate to an audit. And from there, we'll take appropriate action on our part. Follow-ups. In the world of follow-ups, we're working internally to develop a better process for both completing follow-ups and for reporting that important component of our activities to you. We realize that this work has not always been completed timely, and we commit to being more timely and more transparent with this aspect of our work. So look for changes to come there. Hotline activity. So coming from the outside, I am pleased with the number of hotline reports that you have. In my opinion, there appear to be enough reports to demonstrate that it's widely known that there is a reporting avenue, and not so many as to indicate a widespread issue or concerns. As indicated in your materials, we're working with other risk professionals here at UO to inventory and streamline the reporting channels so that we make sure that everything gets followed up as it should be. As we develop a cadence for audit follow-ups, we will also bring a similar strategy over to the hotline activity reports. Hotline reports are taken seriously, starting with internal discussion amongst those who receive the reports, triage to others when appropriate, and investigation. External audit coordination. So we are seeing Moss Adams initiating their activity on the financial statement audits as they schedule control assessment and interim transaction testing. And finally, probably the most important piece of our work is risk assessment. And I am sure that you're accustomed to risk assessment happens in the spring, and an internal audit plan is developed for the upcoming year. I prefer to say that internal risk assessment is a daily activity. It occurs with more rigor in the spring as we develop an audit plan, but every piece of information that you learn goes into your risk assessment. And so a fully mature risk assessment process does involve daily activities. Given the current situation of a new chief auditor, current social distancing requirements, and pandemic responses by your UO risk professionals, it is unlikely that a thoughtful audit plan can be developed in the upcoming quarter. And for that, I apologize. But what we propose instead is to delay plan development until social distancing restrictions are lifted and routine risk conversations can once again occur. So as we move into the unknown, we'll come out on the other side and we'll be able to develop a thoughtful audit plan to present to you at that time. Do you have any questions for me?
Some of us had the opportunity to cross-examine Leah this morning at breakfast for a couple hours, so we got some of our questions answered.
Anybody on the phone have any questions?
It's great to have you here. Thank
Great
you.
to have you.
Thank you, I'm glad to be here.
Have you learned to go duck?
I have, I've been coached on it.
Oh, yeah, okay.
I think Leah's first week here, she went to a basketball game.
I did, it was wonderful. The ladies played an excellent game. I was very proud to be there.
Well, again, welcome. Next item is Jamie. Quarterly finance and treasury reports. And, we owe Jamie a congratulations on a successful bond issuance. Took place a couple weeks ago. So in a very challenging bond market. But I'll let you get into some of the details.
Do you think the rates would be lower today?
No,
No?
there would not. I think Jeff will tell you they would be higher, and it would be much more difficult to actually get any debt today.
I agree,
So
I
the
agree.
market's closed up.
Just
So our timing was very fortunate. So Jeff and I are going to go through. We're going to go through the financial and treasury quarterly report and give you some updates on the treasury side. We have a quarterly report. We also want to give you a little bit of information about the bond issuance that happened, and then we do also have a proposal for a refunding opportunity potentially. And this is, as Jeff will talk about, when interest rates go down, there's always the opportunity to try to refund prior debt and see if we can get some savings. And so we're going to talk about that as an opportunity going forward. In terms of the quarterly financial report, the key takeaway here is that our projections for Q2, which is through December of 19, are basically in line with what we told you for Q1. We are still projecting a very significant deficit. It's 10.4 million, but it's not, the bottom line is not very different from where we were Q1. We do have a couple of items on the expense side in particular that are shifting around, and I'll talk about those in a little more detail. But the basic story is that as of the end of December, our projections were pretty consistent from an overall fund perspective. And I'm going to pause there and say that with COVID-19 coming on, these projections have not been adjusted for things that might occur in the next quarter, and they are very dependent on tuition revenue next quarter that we were projecting. So I just do want to pause that this really is what I would call a pre-COVID-19 projection in terms of where we are. So our deficit, meaning the amount of money that we are short this year, is still looking to be right around 10.4 million. In terms of individual line items, you'll see on your dashboard we've taken some of our larger revenue and expense items. State appropriation looks to be on track. We don't expect any, we hope we won't have any surprises there. Typically what happens is the HEC will go through an ante-up process in the fall, where they will look at how our enrollments and our degrees compare to the other institutions, and we will see an adjustment, but that will hit after the fiscal year is done. On the tuition and fee side, we are taking the production down slightly by $1 million. That actually has to do with our fee remissions or scholarships to students running a little bit ahead of our projections. And so it is coming down slightly. ICC revenue, which is the return that we get from the federal government for our investments in facilities and administration on grants, is up slightly. We're taking that estimate up about $500,000. That just has to do with increased grant activity. As we have more grant activity and more expenditures, we see that ICC return go up. Moving to the expense side, we do have some larger shifts. The largest shift up by far is in compensation, which is personnel services. We are adjusting that up by $3 million or 70 basis points. There's really three different factors going on here. The first is compared to when we first did the projections at the beginning of the year, we have hired more graduate employees than we had initially been expecting, and so that ticked up expenses a little bit. The second issue is we had not settled the SEIU contract when we put these projections together, and that contract did settle at a slightly higher rate than our historical rate. So that's also impacting the numbers. And then finally, a little bit broader than it's worded here, we're actually seeing increased faculty compensation at a higher rate, slightly higher rate than we had projected. I'd say the two biggest factors that are coming into play there are just year-over-year differences in leave without pay, which is when faculty take time off. And then also, you may remember that our total tenure track faculty base is very consistent this year with last year. There was some change in composition. So some of our recent hiring was in the business school where we needed to hire faculty for accreditation purposes, and those faculty tend to be on the higher compensation side. So even when you keep your headcount consistent, if you change the composition, that can impact the numbers. The other two expense items that I did want to highlight are services and supplies and transfers. Services and supplies are on a run rate basis still running pretty high, but this has to do with some pretty extreme timing issues. So we do expect that it's going to come down to the projected 3.5%. Each month that we're tracking this, it's coming down. We just had some very large expenses early in the year. And then finally, net transfers, we are projecting those will be down about $3 million. A big chunk of those are when we transfer funds to help with, for example, facilities projects for faculty. So like when we have new faculty and they need a lab renovation, we are seeing lower levels of that this year in line with our hiring plan. So overall, again, you'll see shifts in different areas, but we are pretty consistent with our overall projections of about a $10.4 million deficit. Pie chart, this is not changed very dramatically from prior charts you've seen. The couple of points I will emphasize, as always, when you look on the left-hand side, we are very, very tuition dependent. And you can see the big gray piece of the pie, which is non-resident tuition, which is really funding the bulk of the E&G fund. And then on the right-hand side, you can see, as always, the largest percentage of our budget is in people, with almost 80% of our budget invested in faculty and staff. So very consistent issues there. And with that, I'm going to hand it over to Jeff to do the quarterly treasury report. And just one note, when he gets to the asset side, we do have a further update from the foundation. They wanted to give us, given all the market volatility, they did just recently provide us with some additional reports that we'll need to.
Good afternoon, everyone. So when we look at our cash and investments, you see in the chart, it's been very consistent with past trends. There's really not a lot to say about this. We haven't seen anything unusual here. The one thing I do want to mention, however, is with our Tier 1, you see we at the end of the quarter, we had about $46 million in there. We have started a new program where we're now sweeping that overnight into investments. That investment currently is earning 1%, but with the Fed slashing rates yesterday, it's difficult to tell where that will end up. So we'll continue to assess that as we go on, but we did start that new program. Similar here, you really don't see much change from prior quarters. We do close on our bond issue on Wednesday. We'll have the final closing document signed. And so next quarter, you'll start to see the Series 2020 bonds put onto this chart. To give you an update then on the 2020 bonds, we did on this past Wednesday, we sold our bonds. We were able to go to market with that, even though it was rather difficult. We sold $120 million of bonds. 100 million of those were tax exempt, another 20 million were taxable bonds. When you look at the chart on the right, you'll see the rates that we got for all of our 4 issues that we've done so far. And you'll see the one that we really measure ourselves against is yield to call. And so at 2.25%, we're actually very pleased with that rate. You can see that compares very favorably to what we've even done in the past. Now, as Jamie mentioned before, I think we feel not only very pleased that we got these rates, but very fortunate that we got the deal done. I spoke to our underwriters and financial advisor today, and they said we were actually one of the last deals to get done before the market seized up. And that was last Wednesday. As of today, the markets still are not functioning at all. They guessed, and this was purely a guess because the markets, as I said, aren't functioning, that if we went to market today, we would be lucky to get a 3% rate and would most likely be much higher than that. So again, at 2.25, we're very pleased that we got that for this deal.
We should remind people what the proceeds are primarily being used for.
Yeah, the proceeds are primarily used for the housing project. There are a number of other projects that we're going to be using this for, but by far the primary project is the housing transformation, the phase 1 of that. And so that, and along with this bond issue, was approved at your December meeting.
Thank you.
So if there aren't any other further questions on the bond deal that we got done, we also would like to ask for your authorization on a refunding bond resolution. You can look at this as Jamie said, as a refinancing, just like you would do with your mortgage. Basically, rates are low right now, but they're very volatile. So we don't know that this will take place, but we'd like your authorization in case we find favorable interest rates. And so what we're looking at potentially is to refinance or refund our 2015 and 2016 bond issues. Those in total add up to $110 million, but we're asking you to go up to $145 million for this bond issue. And the main reason for that, why there's such a difference, if you look at the the fourth bullet point there. All our bond issues, we have to maintain for at least 10 years before we can repay them. And so in order to do that, we have to set up an escrow account if we want to advance refund these. And that escrow account not only has to include our principal payments, but any future interest payments. That's what you see in the fourth bullet point. We have $110 million in principal and just over $30 million in interest payments that we would have to pay off. And then once we add on the cost of issuance and things like that, we are requesting $145 million, not to exceed that. And we're very comfortable that it would not exceed that, given these are pretty set numbers. The only reason, again, that we wouldn't go forward with this is if we find that rates aren't favorable, or if the markets continue to freeze up as they have and we just aren't able to sell the bonds. Of course, we wouldn't go forward with this. But we'd like your authorization in case everything becomes favorable for us to proceed with this.
And I just want to add, to make sure this is totally clear, even though the par value of the bonds is higher, we would only do this if the total debt payments are less for the institution. So we would only move forward with this if essentially it saves us money over time, even knowing that we have these escrow requirements. So.
Okay. That resolution is in the back of this section in the book. Shall we go ahead and anybody have any questions about that resolution? If not, do we have a motion to approve?
So moved.
Second.
All in favor?
All right.
Aye. Any opposed?
Aye.
Okay. We'll talk about the investment funds.
Sure. So in your report, you have the T3 report that we normally get from the foundation. I'm going to have something passed out to you. Normally, we have a lag on getting the reports, and that's because the foundation is working with all of their managers to pull all of the data information, and then they have to analyze that information before they get it to us. And so the report that you were issued in your formal materials was the report that we had received as of the end of September. Given that there's been so much market volatility, the foundation did provide us just recently with the updated report through the end of December, and this is the formal report that gives you all of the data about how the funds are performing relative to the various benchmarks, as well as a little bit of information about the portfolio and how it's broken up. He did also, he being Jay Namiet, the CIO, he also provided a little bit of information at the bottom of the portfolio commentary, just to give you a little bit of an update on where it stands as the end of February. And what you'll see and what traditionally happens with our foundation funds is often when the market is up, they're not quite as far up as the rest of the market, but then they tend to do better when the market is down. And that seems to be the trend that we're seeing in the portfolio in this report, where you can see for the December report, we are up for the year at 17.5, just slightly below the benchmark at 19.4. But if you go to the very bottom of the portfolio commentary, you'll see that Jay shared with us that based on their most current manager information, their best estimate on the T3 portfolio was that by the end of February, it was down 2%, while the S&P 500 was down 8%. It's a little bit of information there. We do not yet have, obviously, March information, and who knows how this month is going to end. So I will not try to predict, but we thought given how much volatility there's been in the market, it'd be helpful. And we asked the foundation to expedite getting us this information so that you have at least the most current that we do have.
And we'll try to work with Jay to get us as much up-to-date information as possible as we go through the next few weeks of March volatility. So.
Yeah.
Okay. Thank you. Next item, got Rob Mullins. Welcome. Eric Riddell.
Mr. surrounded by accountants today. It's okay.
The people that sit next to me in Autzen Stadium will be very, very happy that you're here to talk about this. We've always complained about the audio system. So. Go
Good to
ahead.
go. Well, thank you for the opportunity. Thank you for having us. And you stole our lead. For several years, we've been getting feedback from fans on the experience at Autzen, and at or near the top of the list is typically the sound system, which is 20 years old. And we've done all that we can, certainly over the last 3 or 4 years, to piece it together. We never can figure out how to get the referee's mic to play so that people in the stands can hear. But so we've looked at a long-term solution that also allows us to update the technology on the video board. Our video board was installed, current one was on the west end, was installed in 2008. So we've been through a long, lengthy process working with capital planning and our team on what the options were. And what's before you today is an option to build a state-of-the-art video board with new sound on the east end zone, which would be over the east end zone terrace. Complex project, obviously outdoor LED with a unique infrastructure to support something that needs lifted up into the air like that. So happy to take any questions or answer anything that you have about it.
And funding for this is all
Privately funded, yes.
Okay. Any questions?
It's actually kind of slick that there's going to be video on both sides of that.
That's the goal.
Which is pretty cool.
We're still in the approval process with that, but yeah, we would. Our goal is to be able to put something on the outside of the video board that faces that large parking area, so that we can communicate with fans in the lots.
Do you have code issues to deal with?
I would defer to our friends from capital planning, but I anticipate that there will be some permitting that we have to work through.
Yeah, we've had some conversation with campus planning about the exterior facing video board, and there are further conversations we'll have to have with the city as well, but early indications from campus planning committee were positive.
Never? Jerry?
So my question is just, the second you buy technology, it's out of date. So I'm just curious, what is your hope for the lifespan of this?
Well, we've certainly, the 12 years that we've gotten out of our current video board has long outlasted its life, because you're right, as soon as you install it, when we install it, we'll have the latest, but it does change rapidly. I don't know, we haven't looked out exactly at what we could get out of it, but if we can get another 12 years out of the next one, that's a pretty good return.
Ginevra?
I'm assuming, but can you confirm that the funds for this are restricted for this project? And do you have any sense of timing given this month? Or, I mean, are you moving ahead, all things being equal, or?
So they are restricted funds, and yes, we're moving ahead, all things being equal. But obviously, we're aware that that's subject to change.
Okay. Joe?
Yeah, from the schematics, this is going to move to the east side of the Autzen, and then we'll leave the existing.
The existing board on the west end will be able to stay, and we'll be able to make them work together. The small little scoreboard static display on the east end zone will be removed.
And this may not be for you, and maybe for Jamie or others, but when we have a project like this, can anybody speak to the bid process that may take place?
Yes, so I'm actually going to ask Mike Harwood to come up and chat a little bit about that. Mike, you want to join us for a minute?
Good afternoon. Is this working? So we have gone through a national bidding process for this project. This is part of a national consortium that the university is part of. So they did a competitive procurement process, and that's allowed us to take advantage of some of the schedule and budget implications, as well as also take advantage that that's the system that's already in place at the university. But there was a competitive bid process.
Yeah, and I just want to clarify, so we, as the university, we participate in a number of group purchasing organizations where we leverage scale of our organizations and other organizations, and they go out and periodically do bid processes for contracts so that then we have those contracts and can use them with greater ease. And so in situations like this, there was a national bidding process for the underlying contract for this work that we were able to then hop on and use very quickly, which had advantages of both timing and cost for us in this situation. But it is part of a larger strategy that purchasing and contracting is using, where we're trying to leverage the scale of not just the university, but other organizations to get better pricing and terms from vendors across the country.
Thank you.
And the only thing I would add is the company is the industry leader. They have somewhere in the neighborhood of 70 to 75 of the large outdoor video displays in the Power 5 for football. Obviously, we have work experience with them in some previous installs. There are some efficiencies in that we'll use the same control room for a number of these board productions. Hayward will be a Daktronics, Jane Sanders Stadium is a Daktronics, and we use the same control room on many of these.
Any other questions? Okay, if not, the resolution is at the back of tab 3. Since this is over $5 million, it requires our approval. Do we have a motion?
So moved.
Second.
All in favor? Aye.
Aye.
Any opposed?
Aye.
Aye.
Okay, great. Thank you. Next tab is also an approval item, and that's an amended multimedia agreement with IMG. So.
Thank you. IMG has been our multimedia rights partner here at Oregon since 2008. In 2016, we extended that partnership through June of 22. And then late in 2018, IMG merged with Learfield, national leader in multimedia rights, forming Learfield IMG College. Shortly after that merger, we began talking to Learfield leadership about a potential extension. And so over the past year and a half, we've been having those conversations. And so what we're presenting today is a proposed agreement for a 10-year contract, a 7-year extension, effective July 1, 19, and would go all the way to June 30th, 2029, overall cash value of $123 million, utilizing very similar grouping of the multimedia rights we've had in the past. Again, we've had a successful partnership with IMG and trusted Learfield leadership to continue that. Gives us an opportunity to continue with the market leader. These agreements provide us with a stable guarantee of income, but this one also gives us an opportunity for reward on the high side if we exceed the guarantee.
Our partnership with IMG has been as good or better than other universities' partnerships with IMG.
We certainly feel that way. I mean, obviously we benchmark it against the industry. Sometimes it's a little difficult because there's different assets in it, but we certainly feel like ours fits with our peer institutions.
Other questions? If not, this again needs a motion.
So moved.
Second.
All in favor? Aye.
Aye.
Any opposed? And that carries. And both of those motions will go forward to the board tomorrow as seconded motions from the committee. So,
Terrific.
with that, thank you.
Great, thank you.
Hey,
Yes.
one thing before you depart and leave the CapEx projects, we just want to say congratulations to all of you, and especially the coaches and men's and women's program and all our student athletes. I can't imagine what they've gone through in these unprecedented times. And sad to end the way it is, but I know we're going to celebrate our women's team in particular for years to come as being extraordinary. So really appreciate everybody, and hope we get a chance to celebrate those great players somehow in the near future.
Yeah, thank you. It was a magical season for both teams, and it did come to an abrupt ending, but we certainly do hope to find time to celebrate all their special accomplishments.
Rob, is it true there's going to be a pickup game between South Carolina and Oregon at some YWCA someplace? Or?
Well, I know one of our student athletes did say, "Hey, let's just create a pickup Final Four," and it got quite a bit of attention.
That's legs.
I like it.
Maybe just the men versus the women.
Yeah, I've heard
Sabrina
that. I've
say
heard
she
that before. Yeah, you know,
They don't play hard enough for her.
it would be a heck of a matchup.
Okay, well, thank you.
Thank you, guys.
And with that, I think we can adjourn the Finance and Facilities Committee meeting.